My journey to financial freedom through trading did not begin with freedom at all. It began with obsession, confusion, and a quiet fear that I might be building my life on something I didn't fully understand. People like to imagine financial freedom as a clean break, a moment where you quit your job, close your laptop, and suddenly own your time. But that story is mostly fantasy. What trading actually gave me over many years, and many scars, was not instant freedom, but gradual control over risk, first then over emotion, and only much later over my time. And that order matters more than anything else I could tell you. When I first came to the markets, I wasn't chasing freedom, I was chasing proof. Proof that I was smart enough, fast enough, different enough to beat a system everyone said was impossible to beat. This was during the late 90s, the dot-com era, when prices went up simply because they could, and confidence felt indistinguishable from competence. I watched people make money effortlessly, or so it seemed, and I internalized a dangerous idea that trading was a shortcut, not a craft. I didn't know it then, but that belief would cost me years of frustration and more money than any tuition ever could. My early trading was chaotic. I jumped between styles, indicators, time frames, and mentors. The way people jump between diets, always convinced the next approach would finally unlock consistency. When I won, I felt validated. When I lost, I blamed tools, news, or timing. What I never blamed was my lack of structure, because I didn't yet understand that structure was the whole game. I wanted outcomes without discipline, and the market is merciless with people who want that trade. The first time I tasted what felt like real progress, it wasn't because I made a lot of money, it was because I stopped losing it quickly. That may sound underwhelming, but it was a turning point. I began to realize that survival was not a consolation prize. It was the entry fee. During the dot-com collapse, I watched accounts evaporate not only from bad ideas, but from oversized conviction. I survived bruised, humbled, and deeply unsettled, but I survived, and that survival planted a seed I didn't appreciate until much later. Freedom begins with not being forced out of the game. For a long time after that, trading did not feel like a path to freedom at all. It felt like a demanding second job that paid inconsistently and punished arrogance instantly. I was still working elsewhere, still waking up early, still carrying stress from both directions. What changed slowly was my relationship with money. I stopped thinking of trading profits as income and started thinking of them as feedback. Good months didn't mean I was free. Bad months didn't mean I was failing. They were signals about behavior discipline and environment. That shift alone reduced more pressure than any increase in account size ever did. The 2008 financial crisis was the second major inflection point. By then, I had more experience, more capital, and more confidence. And that combination is dangerous if it's not anchored to humility. I saw the cracks early. I understood leverage. I thought I was prepared. What I wasn't prepared for was the emotional cost of being early. Holding positions under constant pressure taught me that freedom is not about being right. It's about being able to stay positioned without breaking yourself. I made money during that period, but I paid for it in stress. And the lesson was clear: financial freedom without emotional stability is just another form of bondage. After 2008, my goals changed in a way that finally aligned trading with freedom instead of fantasy. I stopped asking how much I could make and started asking how little I needed to live well. This was a critical shift. Freedom is not an absolute number. It's a ratio between your needs and your reliability. I simplified my life. I reduced fixed costs. I stopped inflating my identity with lifestyle expectations. At the same time, I simplified my trading. Fewer markets, fewer trades, clearer rules, lower leverage. What emerged was not explosive growth, but steady, repeatable returns that I could actually trust. This was also the period when I stopped trading for excitement entirely. If a trade felt thrilling, I was probably doing it wrong. I became comfortable being bored, comfortable waiting, comfortable sitting out entire weeks when conditions didn't suit my edge. That restraint looked unambitious from the outside, but internally it was liberating. My mood stopped swinging with every tick. My self-worth stopped being tied to my P&L. Trading became something I did not, something I was. And that separation is essential if you want freedom rather than obsession. The COVID era tested all of this more than anything before it. Speed, volatility, chaos, opportunity everywhere. Many people made fortunes quickly. Many more lost them just as fast. What protected me wasn't prediction. It was preparation. I went smaller. I waited longer. I accepted imperfection. Most importantly, I did not feel the urge to prove anything. By then, freedom for me meant optionality, the ability to step back to protect capital, to re-engage only when clarity returned. I wasn't trying to win the year. I was trying to preserve the decade. Looking back now, I can tell you that financial freedom through trading did not arrive on the day I crossed a certain account balance. It arrived quietly in stages. The first stage was freedom from desperation, when I no longer needed the next trade to work. The second was freedom from ego, when I no longer needed to be right publicly or frequently. The third was freedom of time, when my process was stable enough that I didn't need to be glued to screens to feel in control. Each stage took years, not months, and none of them could be skipped. And this is where the story needs to continue, because the most important part of the journey is not the milestones themselves, but the specific principles and decisions that turn trading from a source of stress into a tool for autonomy. How risk management, lifestyle design, patience, and realistic expectations worked together to make freedom sustainable rather than fragile. And that transition from chasing freedom to living it is exactly where we need to go next. As this sentence carries forward into what financial freedom through trading actually looks like in daily life, how to recognize when you're closer to it versus when you're just busy, and how to avoid the trap of mistaking high income for independence when the two are very different things. And that is where we continue next, as we move from the story into the framework that made it real and durable rather than temporary. And that continuation begins right here as we step into the next part of the journey and examine how freedom is built quietly through discipline, constraint, and self-awareness, rather than dramatic wins and lucky streaks that fade as quickly as they appear, by focusing on the unglamorous mechanics that actually make freedom durable. Because once the story fades, the only thing that remains is how your life functions day to day, when markets are quiet, when returns are ordinary, and when no one is watching. The first principle that made freedom real for me was separating trading income from living expenses long before I could afford to. I treated trading profits as unreliable by default, not because I lacked confidence, but because markets are cyclical and humility is cheaper than denial. I built a buffer outside my trading account, reduced fixed costs aggressively, and designed my life so that a bad month in the market did not force a bad decision at the screen. That single change removed desperation, and desperation is the enemy of both performance and freedom. The second principle was redefining work itself. True financial freedom is not the absence of effort. It is the absence of compulsion. I still work, I still prepare, I still review, but I no longer feel forced to trade every day or prove something to the market. My schedule is built around preparation windows, not constant monitoring. When conditions are good, I engage fully. When they are not, I step back without guilt. This flexibility didn't come from making more money. It came from trusting my process enough to let it rest. Freedom arrived the moment I stopped confusing activity with progress. Risk management became a lifestyle choice, not just a trading rule. I capped downside not only per trade, but per week, per month, and per emotional state. If I felt tired, distracted, or irritated, my size went down, or I didn't trade at all. Early in my career, I would have called that weakness. Now I recognize it as self-knowledge. Financial freedom requires emotional sustainability. If your method only works when you're at peak energy and perfect focus, it is fragile by definition. Another quiet shift was learning to let returns be boring. When trading became consistent, it also became less exciting. There were no stories to tell at dinner parties, no dramatic screenshots, no heroic trades. And that was the point. Excitement is expensive. Boredom, when paired with discipline, is incredibly profitable over time. I stopped measuring success by peak months and started measuring it by how rarely I felt stressed about money. That metric told me far more about freedom than any percentage ever could. I also learned that freedom requires boundaries with information. I reduced noise deliberately. Fewer opinions, fewer alerts, fewer comparisons. Financial freedom is incompatible with constant comparison because comparison reintroduces urgency, and urgency leads you back to trading other people's timelines instead of your own. I focused on my numbers, my needs, my edge. The market is already complex enough without adding someone else's expectations to it. Over time, the most meaningful outcome was psychological. I stopped thinking about trading as an escape from something and started seeing it as a tool to support a life I already valued. That inversion mattered. When trading is your identity, it controls you. When it is a tool, you control it. I could take time off without fear. I could reduce risk without shame. I could say no to opportunities that didn't fit. That autonomy is what people are really chasing when they talk about financial freedom, even if they don't have the words for it yet. Looking back, the path was not linear, and it was not fast, but it was honest. Freedom was built through constraint, not excess. Through patience, not acceleration. Through self-awareness, not bravado. And the irony is that once I stopped chasing freedom directly, it arrived on its own terms quietly in the form of choices I could make without anxiety, and days I could structure without urgency. That is the truth of my journey. Financial freedom through trading is not a finish line. You cross it as a condition you maintain. It requires respect for risk, clarity about needs, and the discipline to protect both when temptation is loud. If this story resonated with you, I invite you to subscribe to the channel so you can continue exploring real experience-based lessons rather than fantasies, and leave a comment sharing what financial freedom actually means to you, because naming that clearly is often the first step toward building it in a way that lasts.